What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy. Hey, Brad, how you doing?
Good, man. How are you?
Can't complain. First week back was a little bit tough, obviously, getting back into the full swing of everything. But also the market was red, so could have been better. But honestly, I'm not changed. I'm still as ready as ever and as excited ever to continue. How was your week?
A lot of adding, which means a lot of volatility for what I own. So, but we'll get into that. But yeah, a lot of small ads this week on multiple days.
Yeah, it was similar. I did a little bit of buying. Most of it was actually today, and we'll get into that a little bit more in a little bit. But I'll throw it over to Gav as well. How you doing, man? How was your week in the market? I know we actually did not hear any of your trades earlier on the weekly howl, so we got a little bit more to talk about there as well. But yeah, man, how you doing?
I'm good. I wasn't like crazy active this week. In totality, I mean, I started off the week good because at the end of last year, I guess, I bought AMD calls and then I sold those in the morning. I guess on Monday trading, we were doing our Monday space. So that was like my first trade, and that was good. Then the next day, I think it was the next day, or maybe it was even the same day, I bought Apple. Yeah, I bought Apple calls, and then I got stopped out, but I got stopped out for a gain. And then my last two trades were unfortunately not so great, and I think it's because I think I just need to like take that small gain sometimes, or just be better with these stops. So I ended up getting in on MU. Um, I could have taken a small gain on this. I did not. I ended up getting stopped out for medium sized loss, maybe like 20% on that. And then the last thing that I'm in right now is still, TBD. So yesterday, I bought SARK calls. So those are, SARK, inverse ARK. They're currently down 26%. These were also up at one point. Right when I bought them, they surged. They were up about 21%. I probably should take profit then, but I did want to swing them because I did want to hedge on my portfolio going into next week. So I'm not super whatever mad about it. Like they were down 31% at the end of the day yesterday, but then today they were up as much as 20% today. I'm just holding them into next week. They're currently, like I said, they came back about 6% today. I have a couple contracts there, so waiting to see what happens with it. But yeah, those were really the three moves. Were sold AMD for a win, sold Apple for a win, lost on MU, currently holding SARK. I also, on the crypto side, I bought this token called LP, which is a combination of US Tether and Anchor Coin. I'm staking that for like 116% APY. And I also staked some US Tether at 19% APY. So that's kind of what I've been doing with money this week. And unfortunately, overall, though, pretty bad week because of crypto and the way that went. I don't even think I guess my stocks were not great, but overall finished this week actually down 8.5% to my growth portfolio because pretty much mostly I was actually up 5% at one point. So it was just a big drawdown pretty much yesterday and a little bit today. I would say today wasn't great. I mean, kind of crypto carried into it, but yeah, hopefully we'll get a bounce back week. It's been a very just rough. I mean, really since November 8th, a lot of downhill traction, unfortunately, at least in these growth portfolios. But that's why I'm diversifying into other areas, specifically with crypto alternatives, and also now actually hedging by buying SARK calls. Hedging is a weird thing. You really want to do it until you actually buy the hedge. Then you look at it and go, "Oh shit, I lose both ways." But it's you kind of got to figure out the mindset, the mentality, and it's important to use the right hedges. So that's kind of a wrap up on how my week is starting so far in the stock market. But also, I'm in CST, which is super weird because basically right when I wake up, the stock market's already open, or I have to wake up early or something. So I was totally thrown off by that. So I traded definitely less because I wasn't like able to like have that same prep for the market.
Yeah, that makes sense. You weren't in the superior time zone, which is EST. I know we have a couple other people who aren't in EST on here as well, and I always make fun of it. It's nice to be able to have that little bit of extra time in the morning when I wake up to be up before the markets open on EST. But there's a couple more things we'll jump in there, Wolf. But I want to keep it going along. I know we have Simon up here as well, and he's gonna have to hop off at 4:30. So I would love to kind of come to you, Simon, first for a little bit of an introduction to yourself, how your week was in the market, and then maybe we can go a little bit into it's hard to we're at the January whatever it is first week of the year. It's hard to kind of think of anything about looking besides looking forward to the rest of 2022. So kind of also a little bit of where you think we're at as well going forward.
Absolutely. Thanks for having me as always, guys. Coming at you from the CST Central Time Zone here, so we're an hour behind the future like you guys are. I just wanted to kind of say it's such a crazy time right now for the market, but don't beat yourself up too much if you're a growth style investor. I mean, like it's almost tempting to look at the S&P that had this 27% return last year, right? And then you kind of break that down into its largest constituents. You see a company like Alphabet that's up 65% last year. You see Tesla's up 50% last year. These are, of course, market cap weighted indexes. And NASDAQ, those are both NASDAQ listed companies too, which also had a great year. But then I was really drawn by the recent Bloomberg story that showed that the number of NASDAQ stocks, the number of companies and the total count that are listed on the NASDAQ that fell more than 50% from their highs last year was actually around 40%, right? That's something that hasn't happened in 20 years since kind of the dot-com burst. And of course, everybody's scared of a whole bunch of things. They're worried about the Fed raising rates. They're worried about inflation of cost of goods sold out there, worried about constricting growth for growth style companies. But I would just say if you're a growth style investor, as I would self-describe myself as, don't look at your portfolio and freak out and say, oh my gosh, how have I dropped the ball last year? I mean, this is kind of a natural cycle that we go through in the markets. You've got to pay up to invest in the stock market in the first place. If you're a growth style investor and things like this happen, it doesn't mean you're picking the wrong companies by any means. This is quantitative data that supports this too. I'm a really big fan of the Boston Consulting Group and a lot of the work that they've done. And I pulled up one of their own studies. They kind of showed the top performers in the stock market. So what are the best performers in the entire market over a 5 to 10 year period? And they go back and they try to correlate those returns as close as they can to individual factors of the company themselves, right? Is this based upon fundamental growth? Is this based upon where the company operates? Is this based upon a whole bunch of different things? And they found that actually up to 70%, between 50 and 70% of total shareholder return for the market's top performers over a 10-year period boils down to top line growth. It's based upon revenue. And that might sound simple, right? You say, okay, just look for companies that are growing that fast. But over a 10-year period, it's actually very, very hard to find companies that can grow at a 30 or 40% revenue clip for 10 years. If you're finding those kinds of companies, you have to be looking at the total addressable market. You have to be looking at what they're doing disruptively or differently that is not just going to be easily gobbled up by the bigger companies they're competing against. And I think that it's just this is the perfect time right now. This is, we've seen this sell-off. We're all unhappy about seeing those 40% of companies in the NASDAQ that have sold 50% or more from their highs. But on the other hand, it's really encouraging for me as a growth style investor. I think that right now is the right time to find a lot of those smaller and mid-cap companies that have got the opportunity to buy their shares at a bargain. Our 7 investing team has been putting our money to work. We're all long-term investors. We're innovative investors. I'd encourage you to check out our website and see our backgrounds and kind of how we look at the market. But our team has been really putting our own money where our mouth is recently. Just these past 2 days, I did a poll of the team. I said, hey, who's buying? What are you buying? And it turned out that of the 6 of us that we have right now that are advisors, we had 17 total companies we were buying. 14 of those were active 7 investing recommendations. And they're all with the intention of 3 years or more. But I mean, to see a group like us, we like to buy and hold. We like to not really jump in and out of positions quite as often. That really says something. And when we've got 17 individual companies in just 2 days that we're putting our money to work with and putting our money where our mouth is, I think it's a great time to be a growth style investor. I think that if you're looking at your portfolio and it's showing a lot of red, just like mine is from this past year, don't beat yourself up because that's kind of natural for the cycle. And it's kind of a huge opportunity for anyone who's looking at getting into those smaller mid-cap companies and holding them for the next 3 to 5 years right now.
Love it, love it. A lot of really, really great points in there. I'm a big fan of 7 investing and what you guys do there. I know a little bit ago, I saw that you guys kind of put out a public pick, or the first time that you guys have put one of your picks out publicly. Can you talk a little bit about what that pick was and maybe kind of a little bit of a background into it or whatever?
Yeah, absolutely. We had 2 recommendations get acquired. They were both in the healthcare field, which isn't quite as correlated to S&P returns. Healthcare is kind of a different beast than a lot of the rest of the market. It doesn't follow earnings so much. It's more based upon other things like clinical trial data and things like that. But we had 2 companies that got acquired. One of them was Dicerna Pharmaceuticals, and the other was Castlight Health. This is the very first time we've ever actually revealed our 7 investing recommendations ever. We try to keep that behind the paywall for our subscribers, but because these were cash offers that they received, we've closed out our positions and we said, hey, we don't think there's any further gains for investors, so we're going to publish our research about those. Dicerna got purchased by Novo Nordisk, a very large drug maker, and Castlight, of course. Castlight Health is not doing drug development. They're more building a health infrastructure platform to help transparency of the entire system. It's costing $4 trillion a year for the U.S. just for healthcare. But yeah, we're kind of excited about both of those picks. I think that healthcare just is one of those huge addressable markets. It's going digital. We talk a lot about that. It's not just about the paper files that have your records behind the doctor. When you go to the doctor's office, something like that, this is digital world. You see companies like Google working with HCA Healthcare in Nashville and other companies out there. I mean, they're really trying to correlate more optimally to understand patients and how we're all so personalized in the healthcare that we need. And it's a huge field. I mean, it's an addressable market that's worth trillions with a T, and it's innovating as rapidly as the regulated environment that it is in can possibly innovate in. But we're pretty excited about healthcare. Those were 2 picks that we revealed publicly. I'd encourage anybody to go check them out. We're making all the research available for free for the very first time.
Love it, love it. Awesome. Yeah, great space that I honestly do not know enough about for me to invest in. So I love to kind of get those things on my radar, ETFs or whatever. You made one point in your initial comment talking about the amount of NASDAQ 100 stocks, or maybe it was just NASDAQ stocks that were off at least 50% off their all-time highs. It was, or maybe it was 40%. The numbers in there, but it was about 50% of companies, and pretty much leads me to go and I look at how the major indexes are right at all-time highs. That makes me think about something that people were talking a lot in the past, and how the breadth of what's working in the market is really small. It's these big, large cap, mega cap names at the top of the indexes that are really driving them to all-time highs. And I feel like that stat kind of backs it up. I would love to maybe kind of get your thoughts on that a little bit, on maybe where we're at with market breadth and maybe what it's been telling you, or the lack of it, what's been telling you over the last little bit.
Oh, I'm so glad that you double-clicked on that one. It's fascinating to me. Thank you for the question. The reason that I bring it up is because there's just a handful of companies, like those ones that we mentioned at the beginning, the Apples and the Teslas of the world. Microsoft is certainly in there too, that big institutions are flocking to right now. There's a flock to safety. They want to stay away from this market volatility. They don't want to get phone calls from people that have money in their funds saying, hey, what happened? Why are our returns going up in fire right now? And so that's why you see the safe stocks right now for this past year have been energy. They've been big tech companies. And there is going to be a point here where that's going to have to rotate back. The valuation multiples of a lot of those large tech companies are going to get stretched as far as they can possibly go. And so when that happens, there's going to have to be the managers of those funds that have got billions of dollars are going to have to rotate that somewhere else. Otherwise, they're just going to have to accept suboptimal returns, lower returns. And nobody wants to have lower returns because the valuation multiples are getting stretched. But again, the U.S. alone has got $35 trillion parked in retirement accounts. At some point, we're going to see that move to somewhere else. It's hard to see where that is. My crystal ball is cloudy on it right now. But when you see even just a huge company like Alphabet growing at 65% a year, Microsoft and Tesla growing as quickly as they have, and those are the companies that are really outperforming the smaller growth style investments. I think that it's kind of the perfect storm for smaller companies to get a little bit more of the risk on mode back into the market again. And we'll see how that plays out in 2022.
Definitely. Brad, I want to throw that same question over to you, kind of the similar concept about what your thoughts are on market breadth right now, or maybe more the lack of market breadth right now.
Yeah, I mean, a lot of what was just said, I wholeheartedly agree with. So I won't really, I won't repeat a lot of it, but I will just say that, I mean, there comes a point where I mean, where the narrative, like it was in 2021, where everyone's in growth land, fully in growth land, and there's no top, and we'll keep going. That narrative ends. We run out of buyers. Valuations get stretched. The narrative and sentiment changes, and these cycles, they churn. And like exactly like Simon was saying, there comes a point where everyone who wanted to rotate into Microsoft, and everyone who wanted to rotate into Apple, and everyone who wanted to de-risk wherever possible, to try and eliminate their beta in a really uncertain time, that ends. And when that ends, when the buyers run out for mega caps, and when when that process plays out, the breath the breath has to be enhanced, because there's really nowhere else to go. And kind of when I think that's going to happen, or how I think that's going to play out. And the key word here is think, because I don't know, and I'm speculating. But we talked a few hours ago about how what's driving all of this hawkish macro intimidation and fear is inflation, which the word used throughout 2021 was transitory, and it appears to be a little bit more stubborn than transitory. But I really truly don't think it's permanent. And I'll just quickly run through those 2 points that I went through earlier today. But number one is our supply chains, global supply chains, don't have a playbook for exiting a global pandemic. They don't have a playbook for responding to how government forced social distancing affects consumerism, and how that rebounds, how quickly that rebounds. And in our bank accounts, we're feeling good with stimulus checks. We can immediately decide, okay, I feel better about my health and my safety. I'm ready to go to a restaurant, and I'm ready to go buy a t-shirt. Supply chains are not equipped to have that kind of flexibility, and that kind of, flexibility is a good term for it, to cope with these massive swings in demand that were brought on by the pandemic. So I think that we're churning through a really difficult process of trial and error. Demand recovered really quickly, and supply chains are catching up. So that inherently drives scarcity. But just like everything else, we under and we overshoot everything. We never perfectly find that equilibrium on the first try, and supply chains will overshoot to the upside. And inventories are already starting to rise, and forward indicators of inflation are already starting to come down. And I think that's going to continue to play out. The other thing that I mentioned is okay. So the comparison is, and I own this name, so I'm not ripping on it at all. But Teladoc Health had an absolutely phenomenal 2021. That was partially aided by Livongo inorganic growth. It was also partially aided by the fact that macro conditions completely took a 180 in their favor, and they were comping versus a very normal period where they were on their compounding growth track, to a period in which that was greatly accelerated. So we got to enjoy this 80-90% organic revenue growth on top of all the Livongo growth. So where am I going with that? So from 2021 versus 2020, these CPI and PPI indicators are comping two extremely different macro time periods. One in which, again, we were shut down, social distancing. The consumer economy, which drives the vast majority of our GDP, collapsed because it was forced to. And now that artificial barrier to consuming is not gone, but it's going away very quickly, and hopefully will continue to go away as we hopefully get through this pandemic. But where does that leave us? It leaves us with an extremely apples to oranges comp for inflation that's causing these extremely elevated levels. So once we get to 2022, which we are in right now, and once we start to comp with macro backdrops that are a little bit more similar, which they're not at all right now, when we look back at our most recent CPI and PPI ratings, I really think that's also going to erode inflation. And bringing that all the way back full circle, when this hawkish tone, I think, begins to fade away, when inflation starts to slow down, and when we get these 3-4 rate hikes, and people realize, well, shit, 1% Fed funds rate is still, historically speaking, wildly accommodated for growth stocks. I think that flight that we've seen to these 6 or 7 mega cap $1 trillion companies is going to end. I can't tell you when that's going to happen. I can't even tell you if it's going to happen because I've been wrong before and I will definitely be wrong again. But that's just kind of where I see things.
Oh man, Brad, I mean, nailed it. Totally nailed it. I loved how you said that it's not just the same. It's apples to oranges, right? And inflation is not the same for everybody across the board either, right? We see these big numbers about the cost of living adjustment and, the CPI and stuff like that, the stuff that gets reported in the headlines. And then we forget a lot of the times that so much of that was due to energy, right? You remember the supply glut we had of oil in the tankers that, the boats were lining up.
Did he cut out for anyone else?
Yeah, he cut out for me,
Does
unfortunately.
he have an Android?
Look, you know what? We're going to take a quick break in the spaces. I'm going to go in and quickly check his tweets and see if they say Twitter for Android or Twitter for iPhone, and we'll come back. Let's check. Quick thing.
I just clicked to bring it back up.
Inconclusive. Simon, do we have you back up here?
Oh, man, he was just about to agree with me.
Are you guys here? Can you hear me okay?
Yeah, we can hear you. Simon, are you on iPhone or Android?
I'm on Android. I think I got censored. I must have said something that the overlords didn't like me saying.
No, it's the Android problem. It'll kick you from spaces like every 10 minutes on Android, unfortunately. It's a bug they've been having for weeks.
I was trying to agree with Brad. I hope that the point came through that I was agreeing with what Brad was saying there.
We got the point. We did lose you about halfway in, unfortunately, but we did definitely get the gist of it.
Yeah, it's just CPI and inflation is not across the board the same for everybody. So much of it is tied up in the price of oil and energy and the recent numbers that we saw. But I think that if you're not exposed to commodities or you don't have a whole ton of debt on your balance sheet, so you're worried about rising interest rates and you need that to run your business. I mean, if you're a software company that's growing quickly and disrupting a huge industry that's got, multiple billions of dollars of market for the taking, this is your opportunity right now. I mean, look for those kinds of companies that are showing the top line growth. I think it's a growth style investors market right now in 2022.
And while we still have you up here and the Android curse and problems are going to continue, hopefully not, I kind of wanted to look back at, we're talking about these inflation, which really is a cause from supply as you dropped off right there. Brad, this will be a question will come into you now, kind of on top of that. But I love the point about that we have no playbook for this. It is just so true. We have no idea how supply chains are going to be able to handle this. And it's been a really difficult year. I've been kind of doing an exercise of going back through some of the biggest events from last year and trying to put together kind of an end of year calendar for that as we look back. And a lot of the problems are definitely focused around the supply chain. We kind of forget the Suez Canal getting blocked was last year. I remember there was tons of articles about ships lining up outside the port of LA. There was just so many problems, left, right, and center, COVID closures. And there was a lot of stocks that, really they have the demand, supply is the problem. There was a couple of stocks that I look at Nike as one of those. But really what I'm getting at here is when you look back to the year that just passed, and from the perspective of supply chain problems, is there anything specific in there that really stands out to you or kind of exercise like that?
So is this me or Simon?
Yeah, we'll throw it to you, Brad.
Yeah, sure. So the thing that stood out to me is, you hinted at it a little bit with the Suez Canal, but anyone that relies on containers or global shipment. So for me, it was Tattooed Chef was really the primary that's where all the pain was felt from supply chains. But freight inflation, cost of transporting goods, just has been absolutely brutal. And we're seeing things from the federal government like or mandating longer hours and more days spent. I always like it a lot more when it's a private market solution than when it's more of a public market solution, or not public market, but public government solution. But yeah, freight costs, which are kind of starting to come down a little bit, absolutely exploded. And the flip side of that is if you relied on air, so not on shipment tankers or containers or on like trucking. So that was Revolve Group for me. That was really the we fly everything in. They really had no issues. Partially that's management doing a good job, but it was really interesting to juxtapose. If you lean on air shipping and shipping in raw materials via that channel, you did not have nearly as much trouble as things like shipping things across the ocean or shipping things through a semi truck. And for me, kind of looking at the effect of that, hopefully, I own Boeing. Their freighter business or their air freight business is extremely strong right now. And we just saw a large order from UPS. So I'm hoping that this boom in e-commerce and maybe this shipping shock that we just had through COVID is going to boost demand there in the short term. But that's kind of an ancillary point. But yeah, it was interesting just to look at how different the effect was based on how you shipped your goods, where they needed to be.
Very fascinating. I really didn't even think too much into the air travel aspect of it. And you know, one of the biggest things about you said there, and what kind of struck me with it was, you know, the cost of container ships and the cost to ship a good was definitely up. The cost per day was up, but also the biggest thing that surprised me also was that the time it took to ship goods was also up. So not only were these companies dealing with increased cost per day, it was taking them longer to get ships and goods from A to B, which is very interesting. I unfortunately see Simon has been bounced off a little bit too many times. The good old Android curse has come in and hit us again. I know we're also supposed to be having Gerg and Stock Talk join in at some point. We'll see if they do, but I will keep it moving with the people we have up here. First of all, I do see the 7 investing account down in the crowd. They're as good of a follow as Simon, so definitely want to check them out below if you did like what Simon was saying. They put out a lot of really great content on Twitter and have a lot of really great stock picks behind the paywall as well if you are looking for that. Also, make sure you're following all the speakers that are up here right now. Brad, Bullish, Rippers, Wolf, Gov, all those accounts are great must follows. But Gov, I would love to bring you into this a little bit more. When you look back to 2021 and all the craziness that happened, I know it's hard to pick out with just one event or one specific thing that happened in there. And I would love to maybe if we could keep it through the supply chain. I don't really care if not. But yeah, what 1 or 2 events really stand out from last year that are maybe kind of shaping how you're thinking about where we're at right now, or what we're doing going forward?
Probably not going to be supply chain for me personally as the thing that stands out. Although great
100%.
comment on Twitter. I don't know if anybody saw, but Vlad Tenev tweeted the other day, basically that they had brought on, I don't know, somebody new working on their crypto or something like that, and he was just like, "Welcome to the team." And then one of the accounts, I think it was High Yield Harry, replied and said, "Weird. My job offer as chief meme officer has not arrived in the mail yet." And Vlad said, "Sorry, supply chain problems." So I think that there are some good jokes to be made out of it. But for moments that actually stood out to me from the year, I think that the big catalyst in the beginning of the year felt like the GME, run. And obviously, I think you had a pump today on GME. What that happened today or yesterday, where it ran? Oh wow, it came all the way down from 25% to finishing up about 7. But yeah, that felt like a good start, right? When they did that trial or whatever you want to call it, I was tweeting that live. I remember I probably had like 200 followers and was just really trying to like start pumping out content. And it felt like that got a lot of people into it. And that felt like the start of the change to, was that even back in, that was 2021, right? Yeah, it had to be.
Yeah, it was
That felt like,
January 2021.
that felt like to me where a lot of the market like really changed, because I think up until that point, although we had kind of seen it with Kodak, there was this idea, right, that like I felt like there was still some stability within the market, and when things pumped super fast, we were going to see that come down, and it was going to be sharp and quick and harsh. And I was in like a paper trading game at the time. I was like, oh, I'm shorting the hell out of this. It was up like $40 at the time, and obviously I didn't win that game. But that was when that didn't come down, and that kind of started to poke holes into whatever it is, efficient market theory or whatever you want to call it. The ideology of the market shifted. Then you had the initial run up, from February had been coming down for a few months. And then it kind of was like, oh, we're back to this. We're having another run up. Tesla's coming back to all-time highs. All these other stocks are increasing. The NASDAQ, the S&P is just setting day after day new records. I think that all kind of felt like that started afterwards. So that was like the first thing for me, was kind of that GME trial, the fact that things weren't just going to come down, that there was a difference to this market. And within that, obviously, opportunity within many areas that a lot of people did catch. And then the second piece was, I would say, right around, I felt like early November here, where a lot of pieces shifted and we started seeing this major downturn, not necessarily in the major indices, or at least in the S&P 500, but where there was this shift to large cap. And it was just clear every single day you were going to see, hundreds of millions, not billions of dollars coming into Tesla, Apple, Google, Amazon calls. And you were just seeing an exodus from the small caps, which had run up, as people kind of tossed them aside And I think it was clear a lot of it wasn't based off of fundamentals of specific companies, although valuations did have to come down. But definitely more profit taking, tax loss harvesting, and those kind of pieces. So I'd say for me, those were kind of like the bookends to the year, that initial, I guess, start to something is different here. And then that capstone of, okay, we're really like kind of going down this path of a lot of people are going to take profit, money's going to be shifted. That felt like the big money move, because to me, the first several months of the year didn't feel like there necessarily was big shifts into different ideologies within the market. We saw a movement into small cap and out of small cap to a point, but it really wasn't like, okay, we're completely moving into save capital mode and attach ourselves to large cap. And I just trying to, kind of try to go with the flow in certain areas. Obviously, still have my long-term portfolio, which I think, like a lot of people have mentioned, our long-term portfolios took a hit over the last 2 months, but try to trade within it and go to where that money was going, so that there would still be opportunity to come out of. And I wonder if we'll have more events like that this year. I actually am pretty sure that we will, where we'll have specific events where like that was a turning point and something changed within market ideology, within market maker ideology, to happen there. But that was kind of, I would say, two big pieces that stood out to me from this year, or from the last year.
We're still in that weird phase where we're kind of going to call it this year, right? 2021 by accident on dates or whatever, if we even have to write those anymore. But we're still in that weird time where it doesn't fully feel like the new year. But I definitely do love the insights and all the comments there. I will keep us moving a little bit onto a little bit of a different section. I want to go through, send it over to Brad a little bit and kind of talk more about what we've been doing this week and how our week was in the market and kind of what's been happening now as opposed to last year. So Brad, I took a quick look at your page, and one of your previous tweets from yesterday was talking about you liquidating your positions, which were nice gains, you said, in Microsoft and Planet Fitness. So I would love to maybe kind of dig in a little bit there into what you were thinking there, what you were looking at, and everything along that.
Yep. And that is a pretty notable event for me. If you know me, I don't really have a whole lot of portfolio churn. So the decision was really based on the kind of the flip side of what we've been talking about: these small growth, speculative, long duration assets getting shellacked, and then a reopening company like Planet Fitness, now trading at, I think, like 65 times this year's earnings, 2022 earnings, and compounding at a far less appealing rate than a lot of these other companies that are now fetching earnings multiples below that. So I do a lot of modeling, and all the modeling should be taken with a large grain of salt, as I tell all my Substack readers whenever I share any of it. But based on kind of where I think cash flow margins can shake out for Planet Fitness once they fully recover, and based on that assumption, again, with Microsoft is a whole lot easier, just based on the fact that we've had decades of data from them for me to draw from in public markets. But for both of them, earnings multiples are a little stretched, as this flight to safety kind of benefits both of them. I mean, Planet Fitness has a fortress balance sheet. Even after the pandemic, it's still in very good shape, and yeah, it's gotten a lot of the same benefit as a Microsoft as we've seen over the last few months, even though it's a lot smaller of a company. So for me, it's taking advantage of both of these names kind of trading at a lot more pricey multiples than maybe they have in the past, and also looking at again, back to all this modeling that I do, and seeing that if my vision for what I think both companies can do in terms of top line growth and cash flow margin shakes out, the forward CAGR and the forward return CAGRs are not super appealing. So and I usually lean optimistic in my projections. So if I'm saying that they're not super appealing, for me, that's an issue. So it was a combination of that, and then also getting down to 12.5% cash from around 17% when this whole period of growth, long duration pain really kicked in, and wanting and respecting the fact that the macro backdrop is extremely uncertain right now. I'm never going to be able to time a bottom, but I want as much flexibility as I can possibly have to take advantage of this really what I perceive to be improving risk reward in a lot of the names that I own, alongside worsening risk reward for Planet Fitness or Microsoft. So it's that same mantra that I have ironed into my brain that I'm sure a lot of other people do too. Greedy when others are fearful, fearful when others are greedy. I don't pick the same stocks as Warren Buffett, obviously, but I do borrow a lot of his wisdom in my process, and that's kind of where I saw things. So I wanted to get my cash position back up, to give myself more flexibility, more ammo to take advantage of any future pain, if we get more macro turbulence that everyone is expecting. And yeah, so cash position went back up to 19%. I'm going to continue aggressively deploying that cash into about 15-ish names that I've been adding to pretty consistently over the last few months. And yeah, that's the plan, and that was the rationale.
Love it, and I really love the aspect you're not kind of obviously not just willy nilly throwing in a buy or a seller or anywhere in there. Everything is a part of a meticulous plan that is really like kind of looking holistically, I'm sure, top down at what everything you have right now and where you want it to be. So you kind of hit on the one question I was gonna hit on there is what you really wanted to do with the money, and it was kind of sitting in cash for now. But I want to ask a little bit, is there any names or whatever that have started to pique your interest that maybe once you do go and deploy capital, I'm not saying you're going to go and buy them today, tomorrow at price or whatever, but the underlying company itself, is there anything that has kind of gotten a little bit interesting to you as two names exited your portfolio?
Yeah, so I'll give three names, and they're all from the exact same industry, and they do the exact same thing. And it's three American cannabis growers that I have in my portfolio. So Air Wellness, Green Thumb, and Cresco Labs, and I've been adding pretty aggressively to all three of those over the last few months. So for people who kind of know a lot about the space, there was a lot of build up, for positive regulation in terms of, pieces of legislation that would lower cost of capital for them, which would be a cash flow margin tailwind that's via what's called safe banking. Things like 280E reform, which bars anyone from selling federally illegal goods, from deducting any kind of charges from their ordinary tax bill or ordinary business expenses from their effective tax bill. So that there was talk that these two things were going to kind of be reformed and changed, and that cannabis names were going to benefit because of it, and that momentum kind of went away, as it has at several moments in the past. It's really been a whipsaw of momentum, and then no momentum, and quiet, and building towards regulation. But while that's all happening, these three companies are compounding at a rate well above 30%, which is the kind of elite benchmark. I'm using quotations for the word elite for lack of a better term, but that's the benchmark I use for kind of separating the elite growers from the good or the great, and they're all compounding above 30%. They're all fetching teens EBITDA multiples, and they're all, if projections are even a little bit off next year, fetching earnings multiples below 30 times. So I mean, without these cash flow tailwinds, without these without this legislation, and without also things like uplisting, they're listed on junior exchanges right now, but uplisting would allow them to get a lot more institutional attention, which would be a margin, or not a margin, which would be a multiple expansion event. But without all of these things happening, the fundamental backdrop is absolutely phenomenal. And the flip side of all of this regulation, what it means, is that CPG, consumer packaged goods companies, or pharmaceutical companies, or these other industries that make all the sense in the world that they'd want a piece of this industry, they'd want a piece of this business, they can't touch any of these companies right now. They can't touch the industry right now, because there's no federal legalization, and because of the extreme regulatory headache that it would bring, and because of the limited licensing that each state has. So what this kind of frustrating period of false starts in terms of regulation and reform, means is that the stronger companies with balance sheets that can weather this storm, all they're doing is growing bigger and stronger and more profitable, with more scale and more brand equity, and more everything, which means when, and it's a when, not an if, we're going to get federal reform. I can't tell you when it's going to happen, but I'm so confident that it's going to happen in the future. But when this regulatory barrier comes down, now it's not these little tiny companies that you can maybe buy for 10 or 15 times EBITDA, or just build something yourself, because there's no scale, and there's really not that much of a capex edge in terms of their head starts from this kind of gray period of legalization, but they're going to be 10, 15, $20 billion companies with massive brands and massive followings that need to just be purchased if you want any part of this, if you want any part of this industry, especially because there's broad thinking that the limited licensing that states have had is going to be grandfathered into whatever federal program there is. It's not just going to be unlimited free for all. So so that was a lot, but the point is that regulation is holding these companies back, holding the stocks back. The companies are thriving. Once this regulation wears off and handcuffs go away, all the delays mean is that these companies get bigger and better and stronger for whenever CPG or any of these industries want to come in and purchase them. So yeah, I've been adding very aggressively to those three names with the expectation that this is a several year plan, several year investment. It's going to take a while to play out, and obviously I have to check and make sure every single quarter and for every single investor conference that they're still executing and still doing the things they need to be doing. But as companies, they're all thriving and they're not getting credit for it. And I think I'm confident that eventually they will get credit for it. So that's really the thought process there.
Awesome, Brad. I love it, and definitely was not too much in there. I love when we get these long-winded explanations and you know, where people really know what they're talking about. They have the information and the opinion on the back end, and they're really giving it to you, presenting it to you, and allowing you to make your own opinions off the back of that. So yeah, thank you, Brad. Big shout out to you. Step back. Make sure everyone up here is following Brad. Make sure you're following all the speakers up here. One more time, I'll say it. And we'll keep moving with introing in the two people who actually just entered into the spaces now. I want to throw it over to Stock Talk Weekly, kind of get how your week was in the market, the first week of the year, and maybe what you're looking at right now.
Yeah, man, it was a great week for me. I didn't expect it to be a great week because my long-term account didn't do very well, but for my trading account, it was excellent. I kind of thought I was over trading at a certain point this week, but the trades kept hitting, and so I kind of kept putting on size and kept putting on trades, and it kept working. So there's a little bit of luck, of course, always, but I just really tried to put a lot of awareness down this week and really tried to be a opportunity hunter. As you guys know, I just got back from vacation, so I was kind of charged up and ready to look for opportunities. And most of the stuff that I did this week was pretty on cue with what I normally do, but just happened to work in terms of the stocks that I was picking. I kind of talked about this earlier on the spaces we were on earlier, but we started the week off with that Tesla long going into Monday off the delivery numbers, which worked really well. That stock traded really well that day. I was in calls, and then obviously I have my commons as well. And then I took an HLGN short, which worked excellently. The stock's down 60% this week since Monday, since we took that short. The reason we took that was there was 46 million shares unlocked on last Friday. So coming into Monday, we wanted to be short that name, and it worked really well. Just an absolute dump in the stock. Like I said, 60% in 4 days. So those puts paid very, very well. I think I bought them across several strikes. I think my lowest gain on those was a little over 300%. So those all paid very well. The uranium stocks was another great play. I came into this week looking at the China plan to spend 440 billion on uranium over the next 15 years. That kind of immediately put those into play. And then we had the Kazakhstan crisis as well, which was another catalyst these stocks could ride. So UEC, DNN, URNM, and CCJ, they all paid really well. The reason I took UEC as the primary position was because last week they also announced that they were going to become the biggest uranium producer domestically. So that was a kind of another specific catalyst for that name in particular. But they all traded really, really well, and did really, really well at the start of the week. Once the Kazakhstan crisis kind of got a little bit of resolution, and we got that phrasing from the Kazakhstan government that like, hey, the issue's kind of coming to resolve. Then you kind of saw the uranium prices cool off and those names slipped, but we traded them only for a day or two anyway, so that didn't really affect my position there. Also traded, we traded a bunch this week. Trying to just scroll through. MYNZ and Relly. Relly was great. That was the short interest squeeze play that worked really well. Obviously, granted, with those they rip hard or they dump hard, so we're in and out quick. But that worked out really nicely. It was like a 2-day swing. So there was that position, and then there was the Beyond Meat position that we took, which was a really nice 2-day swing as well. They launched their fried chicken at 4,000 KFC locations. I figured it would be a catalyst, largely just because there's overlap with the product there. In the future, it's hypothetically applicable to like McDonald's and Pepsi, and so I expected that catalyst to draw a little bit more attention, and it did. Took Vale based on dark pool activity. Mel, I don't know if she's in the audience. No, she's not. But Mel is just so great at analyzing the dark pool activity, and she kind of queued me up and let me know, like, hey, this is really unusual. We're getting like these huge multi-million-dollar prints on Vale almost every day. So I took that trade probably largely on the dark pool activity, and that's a name I've owned and traded before. For those who don't know about Vale, they're the largest nickel and largest iron ore producer in the world, and it's a pretty big company, but the stock trades really well for a company of that size. Traded in the past, owned it in the past. I think last year I swung it for like 150% over the course of a few months on the equity. So it moves really nicely when iron ore prices are hot and when nickel prices are hot, which they're kind of heating up with a little bit of demand coming from China as well. So that was a good play. I'm actually still long Vale because it closed right on our target. I just tweeted about it too, but I was looking for a 1475 close. It closed at 1481, so perfectly above the target. So I'm staying long on that. I think it can really rally from this point to the 16s. I'm looking for 1650, and then 18 is my targets on that. So that worked really well earlier in the week on Bitcoin weakness, and even kind of through the extended week on Bitcoin weakness. We were really kind of pounding the table on being short the Bitcoin mining stocks. For those who have traded those before, I mean, these stocks are really just leveraged exposures on Bitcoin, right? So the same way you have leveraged ETFs, which can give you exposure, these Bitcoin stocks are 3, 5, 7x leverage exposures, however you want to treat them. I mean, it's not a specific amount of leverage. They just act as leverage exposures. When Bitcoin's has relative strength, these stocks rip. When Bitcoin has relative weakness, these stocks dump. And so, seeing Bitcoin under 43, then seeing it under 42, I just felt like it was screaming to short these stocks. And granted, I've been long these stocks too, right? Like when Bitcoin's performing well, I'm not biased here. Like Bitcoin's performing well, I'll wake up in the morning and I'll look at calls for these stocks. If Bitcoin's not performing well, then we look at puts, and the puts paid beautifully on almost all those names. So we were short Mara, Riot, BitF, and Hut, and that worked amazingly on those days. So that was another great thing. Another position I opened up this week was in financials. So I started off by opening up a position in FAS, which is the 3X Financial Bull ETF. It did nicely this week. Not crazy gains, but it did nicely. Options were up a little bit more than the equity naturally, but I also added DPST, which is TSDR. I see him there. He kind of cued me in on it. So DPST is the 3X regional bank ETF, and it's just a little bit more volatile, a little bit more tradable. So right now on my financial exposure, I'm about, I would say 50-50 almost. I want to say 60-40 FAS because I bought it first, but I'm closer to 50-50 now on both. And, granted, the upside's better for DPST, but, so is the drawdown. But I just want to be exposed to financials going into the next few months. And I don't want to be a stock picker in this sector. And I think I kind of mentioned that earlier. I just don't, I really feel like, the upside moves in banking stocks and financial stocks are super arbitrary. People may argue that, but from my experience, they just feel like they're arbitrary. And it really feels like kind of just a decision point on where funds want to put their money at a particular time. And so I prefer playing the 3X leverage ETFs in financials. And so that's what I'm doing. Also, the TRT was again tradable this week. As you guys know, I love trading that stock, and it worked really well this week off the AHR comparison was still running. So yeah, that's a number of stuff a number of things I traded this week, but very active week for me, and I didn't really expect it to be, considering how the market wasn't, performing greatly overall, but we found opportunities and took advantage of them, and it ended up being a monster trading week. My trading account was very happy at the end of this week. My long-term account, not so much, but that's part of the process. And yeah, and as I've said before, I operate my long-term account very differently from my trading account. Like, it's almost two different people, you would think. On my long-term account, I just don't really actively manage my positions as much. I'll actively manage my hedges more than anything on my long-term account, but on my trading account, constantly looking like, where is the best possible place my money can be. That's what I'm asking myself every single day on my trading account. And so that might be part of the reason that it performed well. But yeah, really great week. I really enjoyed the opportunities that were presented, and even in a weak market, it just kind of is worth emphasizing. Like, there's always things to trade, there's always opportunities, there's always a hot sector or a hot theme or a basket of hot stocks, and there you can make trades on those names always. And so that's just kind of a reminder for people who had a rough week this week.
Love it. I love just kind of for the last couple of weeks, the explanations we were getting were just one or two names in there, and Stock Talk Weekly is fully back. I love to see it. I want to ask you a little bit, kind of as you were talking there, you had such an active week. I'm sure you were kind of moving in and out of positions, but I want to know quickly, because I want to get one or two other people involved too, TSCR and in Vegas. But how did you end the week? And really kind of what is your positioning for that trading account going into the weekend? And is that really different based on kind of how we're at macro conditions or where the market is, or is it kind of just normal for you to kind of go and how you did?
Yeah, I mean, I still think there are macro headwinds, and that's why I'm really not looking to like hold exposures, as swings, or hold them for extended periods of time, unless I'm really certain about the fact that they're going to have relative strength. Like, in this kind of market, that's what I look for, relative strength, right? So the positions, I'm still holding my veil swing. We had two green days in a row with that since the ad. Still holding FAS and DPST. We had two green days in a row with that since the ads. So there's a couple of those positions that showed me relative strength this week, even when the market was weak, and I'm willing to carry those into next week. And granted, I haven't seen the moves that I've wanted from those names anyway. So, from my perspective, if Monday those names open up red, I'm just going to buy more. So, those are the kind of positions I like to carry over. Trading these catalyst-based names, like if there's news, like the uranium names, for example, right? Like, if we had just bought and held those, like we got in those, some of them on Friday, and then full position on Monday. If I had just bought and held those all week, I would have given up most of my gains. But instead, we were quickly in and out based on the trend. Like, the second uranium spot prices started dipping, we were out. And that is the time you want to be out, right? Because if you don't have awareness of, like, especially when you're trading companies that are like, the stock price is really leaning on the commodity price. If you're not paying attention to that and you're just blindly buying and holding, you're going to lose money, or you're at least going to lose your gains. And so, being in and out quickly on the themes and the catalysts, I think that's super important, and I think it's still important. But, with regard to finding a few names in a few sectors that are showing good relative strength that you feel confident in holding for a few days, like for me, like financials and like Vail and like a couple other names, those to me are nice to have. And, not that I'm saying like swing trading market is back. I certainly think it's not. But, there are certain names you can hold overnight and certain names you can swing that can work well. So, that's a nice thing to realize if you're a trader, and you don't want to just day trade everything. Granted, most of my trades lately have been day trades, but it's nice to have names that you can lean on, hold overnight, when you have a good thesis behind it, when you have, dark pool prints and, a decent chart set up, and, volume inflows coming in, even on the regular session tape. Those are all good signs that kind of give you this, the ball's already rolling sort of effect. And you can jump on and ride it for as long as you want. and not try to ride it into too much general market or broader market weakness. So, that's just what I'm thinking, going into next week. And most likely next week we'll have a bunch of new catalyst opportunities, which is why I love about catalyst trading is Sunday night I'll be reading the news like a madman and I'll be looking for other sectors and other themes that I think will get hot. Monday morning I'll be doing the same thing. So, I expect there to be a lot of opportunities next week as well, regardless of if the market is weak or strong. And that's the beauty of it. Everybody's always concerned, like, what are the indexes going to do? Like, the indexes need a correction or the indexes need to go up. Like, that's great. And it matters to an extent. But, like, in reality, whether the indexes are up or down, there are always, a number of tradable opportunities and themes that pop up every single day. So, leaning into that philosophy and that like way of thinking, I think is important in a market like this.
Love it, man. Love it. I totally do agree with you. Quickly, you kind of mentioned in Sunday night there, and that made me only think of one thing with you saying that, and that is the trade of the week that you did for a while that I know kind of has been gone a little bit with vacation. Are we back this week? Is trade of the week going to be back Sunday,
Yes.
8 p.m. EST,
We
7
were
p.m.
supposed
EST?
to be back. So I was supposed to be off vacation last Friday. And then I kind of got caught up and like extended it a little bit. And part of that was just me wanting to stay on vacation, I guess. But so yeah, it was supposed to be back last Sunday, but now it's really going to be back this Sunday. So that's for those of you who don't know, haven't tuned into that show. It's a Twitter Spaces show I host, or hosted for a couple weeks. We hosted it for about 7 weeks before we took a pause for the holidays. But I really enjoy it. It's just basically a show where I get about I try to get it half, but it's not always that case. I try to get about 15 pro traders that I know and I'm familiar with, and then about 15 audience members who are completely random. There's no screening or anything. They just pop up. It's kind of like audience picks. And so we get a total of about 30 stock picks. We go into the next week and we kind of make it a little friendly competition. And so that will be coming back on Sunday night, 7 p.m. Central. So for those who are interested in tuning into that, be sure to tune in. I know that our turnout was phenomenal. The last few times I hosted it, we had between 1,500 and 2,500 active listeners. So I really enjoyed it. And I think a lot of other people who were tuning in enjoyed it as well. So that'll definitely be back this Sunday, finally. But yeah, I appreciate you bringing that up, Evan.
Yo, I forgot I was supposed to text you. I wanna be on that if possible. Do I still gotta send you a message?
Of course. No, you don't gotta send me a message.
Gotcha.
I got you. I'll put you down.
I would ask to be on it, but I mean, the 3 champ, I feel like just automatically gets put on it. Doesn't even need to
I'm going to rub that into the dirt too as soon as, hey, 3-time champ is back.
The champ is here, but I'm excited to get back into that. Unfortunately, TSDR had to drop off. I took way too long with getting into him, but that's my bad. But I want to throw it over to Vegas, bring her into this. Get a little bit on how your week was in the market, Vegas. Anything that really stood out to you, and maybe as we're heading into next week, anything that's really like any setups or anything like that that's standing out to you as well.
Yeah. Hi, everyone. I hope you guys had a good week. I found the week, quite interesting. I saw the financial stocks, like the bank stocks, did really good, and had a really nice swings on a couple bank stocks, in particular, Citigroup and Bank of America really stood out for us, and did some really great strength in there. And there was some serious dark pull. I mean, I did post that on my Twitter feed during the week. Definitely watching and one to still watch for sure. I know Stock Talk Weekly, you mentioned, I hope I pronounce it right, Valet. I always call it Valet, VALE. But that looks great. And especially the dark pool validated over this 1425, heading towards, I'm looking for that one to go to 1625. I did actually share a swing trade earlier in the day on this one for Jan 21 for the $15 calls. They were 30 cents and they closed around 36. So definitely looking for some follow through on that one. And definitely we had great action on Schlumberger. I really missed an opportunity there, which is unfortunate. That one had a nice move this week, but definitely watching, and I'm in Disney contracts for Jan 21. and the 160s, and I'm looking for Disney to have a move to the upside. As you notice, a lot of the travel stocks were popping, and the money flow on Disney has been relentless over the last few weeks. So it cannot be ignoring the Disney setup. We have support here at 152.50. So really looking for Disney to head towards 162.50 and 163.75. And so I was happy to see today in particular with the travel stocks popping that Disney did reclaim that 158.50 level. And it did have a high of day, obviously, here to 159.30. So it is on track. And so I'd like it to see definitely break 161 and then looking to go to 163.75. They have earnings, February 10th, but this is not an earnings play. So there is still time on this. And, it's been a little chop holding this one all week, but never once. The support never got broken. And so still very strong. And also Lucid Motors. We saw a lot of action in that today, and it went all the way to 43.28. Or Lucid to me has room to go to 45 as long as it doesn't go under 36. But I love that it stayed over that $40 range. And if it can stay over that 40, I think we can see 45. So that's a good one there too. And congrats to Tesla traders. I mean, I didn't trade that one. That was a great one. And I know DWAC was really good yesterday, but I didn't trade that one either. That was a really nice reversal of that news that actually was old news, because we've always heard that DWAC was going to launch in February. So I guess, the market thought it was fresh news, but it was actually old news. And that's pretty much it. So, just watching these setups and letting them, things take its place. Watching Oracle's had a lot of money flow come through also on the dark pool. And so watching Oracle for a break over $90. And then last but not least is Apple. Apple had a huge dark pool prints today, over 700 million. A lot of money coming through on Apple. And we should really be watching that closely and see what it's going to do. Is it going to get over 175, or is it going to go over under 170? So definitely keep Apple on a watch still. That one's been tough to trade. I've kind of stayed away from it because I'm not feeling comfortable trading Apple right now until it breaks that 175 level. So I have that one on watch. Although I like trading it, I'm just not liking it lately. It's been annoying. And CCL, I've talked about this one for a while. That's had a great run. I love it long term. And I had a nice action on it today too. So those are kind of the ones I've been involved in.
Awesome. Love it. Seems like a very busy week. I love to hear it. Was there anything towards the end of the day today that you kind of saw that made you interesting for what you're going to do some more research into to look kind of maybe for that setup on Monday? Was there anything any big setups you saw towards the end of the day kind of position themselves for next week?
I mean, I like we talked about Valet. Stock Talk Weekly mentioned that, but I'm gonna do some research actually on DOCU, DOCU, because that one there's had a huge drop, and I was watching it all day, and I'm wondering if it's kind of found some support here. And I'm going to be looking at DOCU. I think it's had some serious consolidation between the 165 all the way down to even 132. I think we could start to see this have an ascending trend. So I'm going to have to do some research, because obviously this has pulled back significantly, since it had its earnings. But I think it was, basically what the management said at the time. So I think it's kind of scared investors. But I think, if we look at the 52-week highs on this stock, this is kind of one of those story plays that I love. So I'm going to have to dig into this one, because that one's kind of catching my attention. And even today, I mean, it did go to 144.73 and pulled back to 135.59. So I'm going to dig on that one. That one's, kind of caught my attention at this point on that one in particular.
Awesome. Thank you, Vegas. I appreciate that.
Oh, yeah. Sorry. And I want to mention Baba. Sorry. Baba. Baba. I love Baba. I have a swing in Baba for the 140 calls for Gen 21. You can also look at the 135s. Baba has very good support as well at 123.50. and there has been some dark pool activity as well. And I believe Mel's shared that as well, that Baba's had some activity. So definitely liking Baba for a swing. And that looks really good too. It had some nice action, and it kind of reversed as well throughout the day when after had pullback. So definitely one to watch and or consider for a swing trade for sure, as long as it holds that one does not go under 123.50. So I am looking for Baba to go towards 138. So I'm looking for a nice, move from where it's at right now.
Awesome, perfect. Thank you. Pablo is one that was getting beaten up, and I feel like, maybe it wasn't I don't know, have any data behind it, but it felt like on social media last month, it was really the poster child for tax loss harvesting and tax loss selling. So I was kind of expecting maybe this January to be a turnaround for that type of stock, which obviously has not happened so far. Great. I want to take us back a little bit of a step. I want to say one more time, I've said this a bunch of times, but the reason I'm doing it is because the speakers we have up here, they're coming up here for free to give really, really valuable information to you all. Just the least you can do, and it's going to really end up being a benefit for you in the long term. Social media is what you make it and who you follow. It's about following the right people, and all the accounts up here are the right people. If you want to be in investing, if you want to be a trader, if you want to anything with the stock market, these are the type of accounts that you want to be following up here. Anyone who's up here as a speaker, click into their profile, check them out. And give them a follow. And then with that, I would love to throw it over to Gav if he can give us a little bit of a calendar shout out for 20, 30 seconds.
100%. If you're in the audience and you're enjoying spaces, this is directly for you. Myself, Stock Market News, Stock Talk Weekly, your hosts up here, have all been collaborating for now. We've been doing this for months now on the single best tool for allowing people to find our Twitter spaces. And this is simply how it goes. I'm sure many of you are very busy people, probably have a lot going on in life. Similar to me, you live off a calendar, right? If something's not on my calendar, it is not happening. And that's why we've created the Google Calendar for Twitter Spaces, so you can know ahead of time. In fact, sometimes a week or even more ahead of time, exactly when every single one of our spaces is going to be, what the topic is, who is speaking on it, and if you miss it, where to go to find the recording. All you have to do to get onto this Google Calendar is DM either myself or the host, Stock Market News. Shoot us over your Gmail preferably, and just ask to be on the calendar. It does work with other emails, but a Gmail is preferable, and that is it. We'll add you to it within 24 hours. You'll get an email, and that will allow you to add it right onto your personal calendar. You can toggle it on and off, see when everything's happening, and if you don't like it, you can unsubscribe for free. It doesn't even send us a message, but you'll probably love it. So once more, it is completely free. There are thousands of people using this now, including people with over 1 million followers, hedge fund managers, regular speakers on these spaces. Just make your life easier when it comes to getting educated. So that's all I got there. Shoot us over a DM, and we'll get you on that ASAP.
Love it. Yeah, like Wolf said a couple times in there, it is definitely one of the best tools that we've created, if not the best tool that we've created. We're trying to upgrade it every single day. We are now adding the recordings after the fact, so it's not just here, the space is up, it's upcoming. It's, I missed this space. I can click in and find the recording really easily. We're trying to upgrade it, do so much stuff like that to just make sure you are on it. And the way to get on it is to send myself or the Wolf account a DM with your Gmail asking to be on the Google Calendar. You will not regret it. And if you do regret it, which you won't, there is a super easy way to get off the list without even letting us know. So we appreciate that. I appreciate you for giving that out, Gav. And then I want to go for a little bit longer, 10 minutes or so, and then we'll start heading up into wrap-ups. I do have a couple thoughts. I would love to throw it over to Stock Talk Weekly first and kind of talk about one of his more long-term names, and that is RDW. And I kind of wanted to get your perspective on this company in the fact that, the reason the stock has moved down a lot recently, there might be a couple causes, but it really stems from them pushing back their earnings report, which, it is a very unfortunate thing, something we end up thinking they could solve, but it's causing the stock to go down a lot. And it's not necessarily a huge fundamental thing with the company that's changing how it works or changing the underlying fundamental story. So really the question I'm getting at here is, how do you deal with this type of stock that you want to hold for the long term? That's down 50, 40%, obviously still higher than what you bought it at, but still down 40, 50% over the last little bit on, something like this where it's them delaying the earnings report and not necessarily fundamentally changing about the company. How do you deal with that type of situation?
Yeah, so it's tricky, right? Because, I always kind of advocate for position management and risk management. And so, looking at looking at that name, that has to be probably my biggest loser of the year in terms of just my expectations versus what happened. Granted, it made really, really nice moves before that ER delay. I mean, it traded really quickly between that 10 to 15 range, and it gave, a lot of tradable opportunities. Like you said, the thing that, caused this stock to trade down solely and completely was the ER delay. So, knowing that, it was difficult for me. I definitely went through the process of deciding, like, do I cut this trade? Do I move on? Do I take my losses? But, like you said, because I'm really long-term bullish on, that company, both from a valuation perspective and a growth perspective. Actually, it's one of those rare cases where, it's trading at, it IPO'd at a 600 million valuation. Now it's trading a lot lower than that. Trading at a 300 or 400 million valuation. So, knowing that, and knowing that hopefully the revenues or the projected revenues haven't changed much. Granted, we won't know that until they drop an ER. I've been patient with this name. Maybe more patient than I should have been. Time will tell. I average down aggressively. I am still long on that name. People ask me that almost every day because I know that there's been a huge drawdown in the stock. But I really do believe if, that ER drops and they beat the projections they put in as a SPAC, I really think that stock will explode. It trades very thin. It doesn't really have an astronomically large float compared to a lot of other D-SPACs. I think it has like a 20 million float, which is, pretty low for a D-SPAC. A lot of these have hundreds of millions of shares available. So, it can move with the right eyes. And I still like the sector. I still like the company. For those of you who follow their Twitter page, I mean, they are constantly on new launches. They've done 7 launches this year with NASA and SpaceX. They're being involved in the Blue Origin Orbital Reef project, which is basically, an additional international space station for those who aren't familiar with Orbital Reef. But they're basically involved in every single blue chip space project. And, it's a company that's worth a couple $100 million. So, looking at that and looking at how many blue chip partnerships and contracts they have, I really do expect their backlog to be swelling at this point. I would be astonished if they didn't at least hit SPAC projections on revenue. But granted, I don't know what the ER delay was for, right? I mean, it's been a while, and, ER delays can be for a number of reasons, usually accounting issues. And they can take anywhere from 2 weeks to a couple months. And, this one has been on the longer side, which has made it hard to be patient. But I'm still in this name. My thesis on this name won't change. The way I view my long-term positions is differently from my trading positions. My trading positions, I'm looking to manage risk, take profits, prioritize capital. With my long-term positions, I'm looking to build a thesis and then ride the stock as long as that thesis is intact. For this stock, despite the ER delay, the thesis is still intact. My thesis is that it's undervalued versus peers. It's a good valuation in general, and that it's a high power growth stock that I think has a ton of upside over the medium to long term. So those things haven't changed. If the ER drops and the revenues are just massively disappointing, they're 30-40% below projections, and the backlog is suffering. And if I see these things in the ER, then my thesis will change, and then I'll consider getting out of the position. And maybe it'll be, too little, too late at that point. Maybe end up taking a bigger loss. But I'm okay with that because, I just can't find a reason to be bearish other than the ER delay, which to me is a really arbitrary thing. This is a company that is an M&A company. Like, that's what they do. They're private equity roll up, initially. And so, they're all about M&A and constantly acquiring new verticals via acquiring smaller companies. And that does bring, certain accounting issues to light because, when you're trying to acquire all these smaller companies and you're trying to integrate their financials and their balance sheets into, a conglomerate, then, you're going to have these inconsistencies and, these, I'm sorry, my dog is being crazy. Stop. You're going to have these inconsistencies that may end up showing up. And, that's kind of what we've seen, I think. And so in my eyes, if I had to predict, I think it's a minor accounting issue, and they're just really being diligent by doing a full audit, full internal audit, so that they stay SEC compliant. And so that's what I view this as. And I think that, again, if they do report ER with the revenues in line or as a beat, I really do think the stock will trade a lot higher. So that's my kind of overall overview on RDW.
Yeah, it's a tough situation, especially like we were talking about there, that, your thesis is still intact, yet the company, for some reason, I'm sure if they would have came out with a good announcement, here's why we're delayed, give us some time, we'll do it, the stock would have been significantly higher, probably still down, of course, but higher than we're at right now, which is interesting. I definitely want to make sure we can get TSDR in this quickly, but stock talk. One more question there, kind of sparked at the end by your dog. I don't know if we've ever talked about any like pet related stocks with you. And we obviously got a Doge there in the background. I wanted to know maybe any pet related stocks, anything like that you own, catch your eye that you're a fan of, or anything like that.
I like trading Chewy options, but that's about it. No, I don't own any pet related stocks, but I like Chewy as a company. I use them. The stock trades really, really nicely off key levels. So it's great for bounce trading or reversal trading with options. Or even catalyst trading with options is great and has paid really well. It's probably one of the large cap tickers that I've had very few losing trades on. Like when I go back and look at my trade history for Chewy, it's been mostly all green trades and pretty nicely green trades. And so, when I have a stock like that I've traded several times, that's worked several times, I like to keep trading them. So yeah, that's a name I trade very often. But no, I've never held a significant equity position in terms of an investing standpoint in any of the pet stocks. If I had done that since I started trading Chewy, it would have been a really nice upside move. But I'm more so in and out with the quick gains on those kind of names where I don't have a ton of desire to accumulate a massive position and hold them.
Gotcha. Sounds good. Appreciate that. With that, I want to actually get to TSCR this time instead of having him up here, and my poor hosting skills taking too long to get him into the conversation. TSCR, how was your week in the stock market? Anything stand out? Where are you positioned at the end of the week heading into next?
Well, first off, I don't think you have an ounce of poor hosting ability in your body. So I want to shut that conversation down right away. No, thanks for having me up here. A few things just off what StockTech just said. I've been looking back at my last year, and I was remarkably shocked to see, because I traded Chewy, a decent amount of times. I trade a lot of stuff a decent amount of times, but Chewy was one of my better performing stocks last year. Not overall money wise, like it was probably like 20th, I believe, on how much actual dollars I made on it. But my win percentage and win to loss, average win versus average loss, was the second best performing stock that I had all year. So that was just really interesting. And I certainly wasn't expecting that. If I wouldn't have looked at the data, I would have had no idea. So that's something that I'm going to be mindful of definitely all of this year, and keep it in the forefront of my mind. No, this week for trading, I mostly do day trading. My money, I've got about 75% of my account, or my investment accounts, whatever, is in my day trading account. And it was really good. I had 5 green days in a row, which was absolutely phenomenal. I haven't done that since I honestly can't remember when. Even though 2 of the days were very small, about under $100, I was still very satisfied. I had 2 pretty solid days, Thursday and Friday. But as I brought up on the call earlier, I've got such a short-term mindset when I look at stocks, when I look at charts, and I am trying to expand that a little bit. And a few people up here have certainly helped me with that. One stock that I think is going to perform very well, that StockTalk talked about, was Vail. and I'm positioned decently in that for a swing trade based off his analysis. And I'm very excited for the next couple weeks and months for that stock, especially from a technical basis. The chart looks absolutely phenomenal. You call it an inverse head and shoulders, however you want to look at it. It closed at a very key spot, and I think if we can possibly break that 1510 level from a few months ago, it has significant upside for the year. And it plays into the theme that we've noticed in the first week so far of commodities performing very well, whether it be lithium. I hadn't actually followed lithium very much, but copper, aluminum, steel, and oil, and even throw financials in there. Not a commodity, but they do trade somewhat alike. So I am really excited about that one. And but some of the reason why I'm looking to expand my time frame slightly, or at least improve that ability this year, is because uh, when the FOMC minutes came out on Wednesday, I wanted to trade it, but I didn't. I felt it would be more beneficial for the whole year, or for at least the first half of the year, to just observe the market and see what stocks held up during that time. And We're outperforming while everything else was dumping. And by everything else, I mean, the stocks that I personally, have been trading for the past 6 months to a year. And why I want to expand that horizon is because a lot of these stocks, they're not incredibly volatile. I mean, Coke, Pepsi, Cat. I mean, if you're trading, options on them, in the money or one strike out of the money, sure, you can make, significant gains on them. But I want to be able to get that 1 month move, that 2 month move, or even a whole quarter or half the year move out of a lot of these that I know are going to perform, or at least I assume are going to perform pretty well for the better part of half the year. And in all these spaces, everyone's touched on them, and I can't give any differing insight than what people have said, but that's what I've got working on. In a shorter time frame, I said earlier, the Qs are down 8 out of the past 9 days have traded down. We are at a short-term channel that we've been trading in since mid-November, between 400 and 475. I'm not looking at the chart right now. I believe it's about 477, 377. I'm going to pull it up very briefly. Yeah, 377 and 408 is obviously the high, and I I wouldn't be surprised if we see a bounce from here and continue trading in this channel up here. I mean, look at the IWM, what it did all of last year, and it just traded sideways every time it got down to the bottom of the channel. It bounced right back up. Every time it got to the top, came right back down. And until I'm proven otherwise, I'm not going to go extremely bearish on the market. And, from a short-term technical standpoint, we're at 11 stochastics, which is essentially just RSI, oversold conditions, being down 8 out of the past 9 days on the Qs. And it's going to be tough to short stocks in the whole. The past 2 weeks, I've been mostly playing puts or shorting stocks. And it's going to be tough to continue to do that next week. So I will be looking to likely take some bounce trades and hopefully get over some short-term resistance levels in some of these growth stocks, because for the next week or two, while the market remains so volatile, and these growth stocks have such incredible range, Nvidia, AMD, mRNA, BABA, etc. I'm going to continue to play that range every single day and stick to the stocks that I'm comfortable trading, and just continue to execute intraday setups with high reward and low risk probabilities. So that's what I've got.
Love it, TSDR. Very well spoken. Always great, fantastic. I was going to say a pleasure having you on the spaces, but God will remember what happened last time. I got a little bit of we'll say shit for it. It's Friday. We can curse a little bit on the spaces. There's really nothing restricting us back. I feel like we overall will have a little bit over of an older audience, but we still avoided a little bit. But I appreciate that,
We're,
TSDR, and I see we got, yep, go.
we're a family-friendly show, just very modern family.
Good show too, Modern Family. Side note, but we got Gavin up here. Would love to kind of hear a little bit how your week was in the stock market, and maybe what we're setting up for next week if there is anything there.
So for me, right, like I've been saying from December, I plan to add nothing long term, and this week I made two trades, and both of them were in the same SPAC, and I'm heavily levered in that name particularly. And I'm just making money off the insanely high premiums, right? The premiums on those options shouldn't be that high. So I took a very, very highly levered position in the underlying equity, and I'm making money shorting the call premium. That's the only thing I've been doing. And if this continues, I will do this in the entire year. I wouldn't make any other trade. I would go into these SPAC names that have the floor, like a highly levered bet, and do the same thing, right? So the SPAC I'm taking right now, it was offering 8% in 24 days. Almost no downside, and this is with no leverage. And most of the brokers, you can easily lever up 2 or 3x. So for me, it makes no damn sense to trade anything else as long as this opportunity exists in the market, right? That's what I've been making my money off of. Other than that, I've been almost watching nothing, right? I see people panicking. I mean, ARK is down 5 days in a row. QQQ, like I think TSD mentioned, 7 up to 9 days. For me, this really doesn't matter, right? Because the premium theta works for me. Every single day the stock stays flat, I make even more money. And the IV, right? And the IV was heavily inflated too. And as the stock starts to stay stagnant, IV goes down too. That makes me money too. So I'm being short the wall this year. Other than that, I'm buying nothing. I did place a buy order for VIRT on the first day of the year, that was third, but it still hasn't filled. Other than that, my plan for this entire year is to make money off these highly inflated option premiums. Other than that, I might even not make a single trade this year. So watch out for that. If you see insanely high premium for no reason and there is downside protection on that name, go short the wall.
Perfect. Thank you, Gerg. Always a great pleasure having you. We're going to slowly kind of move us into wrap-ups in a second. I see TSDR has his hand up. You had a comment on that?
I was gonna bring up a different topic, but you remember we're close.
You can go for it. You can go for it.
One thing we haven't discussed very much on these spaces, and earlier I was going to say it before I had to go deal with diapers, is the number of IPOs last year and their performance. I know I missed a lot of spaces, but have we discussed that at all in depth?
No, we haven't, but I think Wall Street Journal on the 30th of December put out a very, very good article. Like they went through each and every IPO and compared that performance for the entire year. So I will look into that. That has all the names.
Yeah, I was looking through a Barron's article that 2020 had a lot of IPOs, and this year 2021 doubled that, and the performance is gruesome to say the least. Of all of them,
the average was down I think 9 or 8% for the year.
Yeah, and
did he cut out?
Yeah, we lost it towards the end.
Can we shit on Caddy with a bit more? Or
I'm not there in that one, but Gerg, two things. One, first of all, I am looking at this article you were talking about.
IPOs in 2020 produced an average aftermarket return of 76.
TSDR, you're cutting in and out a little bit. Would love to come back to you a little bit later.
But did you find that, Owen?
I am looking at the article. It is very interesting.
So with that,
underperformed or went below their IPO price. Astonishing.
TSDR, I did just mute you there just because it was cutting in and out. So that was me doing that. But I'm looking at the article. 34% of all IPOs ended the year trading above their IPO price. So that's pretty fascinating.
Almost 1 out of 3 were green, and majority were red, right? So So, but with that, right, if you go and scroll down, they have a dot graph that plots the performance every single day of the year. So if you go and slide that will show you how did the IPO do when they went live and end of the year. It's like a scatter graph, right? Yeah.
Now I'm looking at this. Is pretty cool. This is some good data here, and it felt like for a while there was a kind of a. I'll take a step back. For the long term, for me, IPOs were not something I came into this that was very interesting to me. I'm not really there in that first year or two. I'm waiting for the stock price to settle out a little bit. For me, most of my IPO at kind of buying is happening a year later at around 35 to 50% below the IPO prices when I tend to start getting interested. But it felt like 2020 as everything else was sprinting. IPOs were as well, and it kind of the sentiment changed a little bit for a short time in there. Where it was like IPOs are fantastic, great buys, and we returned a little bit to reality. It looks like in 2021. I wonder what the best performing IPO was, though.
I think it should show that on the end, right? If you go
Esports
all the way on the
technology.
bottom, it's some Spanish soccer, right? The Chinese one that got pumped, maybe.
I'm seeing esports technology, which I think is GMBL, but I could be wrong.
So with this, right? So IPOs are always mispriced. It could be on the upside or it could be in the downside, right? I haven't seen a fair valued IPO in a long, long time, right? Almost all of the S1s are late, all of the proposals are late. They tend to be very, very overvalued or they tend to be insanely undervalued. So I haven't seen a perfectly balanced IPO in a while. I think undervalued UPSC was flat for 3-4 months at 40-50 bucks. And suddenly people looked into that, the stock's up 1,000%. The other one was, I think, Palantir, right? PLTR. They listed at $8 for a month. They were flat, then boom, 40 bucks, 50 bucks, 45 bucks. So always with that one, right? You can find insanely priced stocks on both directions, great longs and shorts. So
I would say that on IPOs, though, the base is definitely going to be overvalued from the perspective of the company going public.
The higher
Why would I go
more
public?
money, they will make, right? The more money
why would I go
raise,
public at a price that or why would I go public at a price that at a valuation that I didn't love and think was fair?
Same thing, right? Look at Lucid at $10. The deal was in talks.
Because you need money.
Yeah, they need money, right? At 11 billion, they did the deal, but
you go public because you need
it
money.
Came out, it was at 50 billion, but they still went on and continued with 10 billion. So there are some exceptions, right?
I do hear what Brad was saying in there. I believe it was Brad who cut in. There are some scenarios where a company will need money. Yeah, and that definitely does make a lot of sense. And but you have to judge that opportunity as they come into. Obviously, doing any blanket statements, especially on something which can be as diverse as IPOs, is never going to be successful. But I think that is a decent spot there. I would love to kind of head us down the route of wrap-ups. I would love to start it with Brad, the speaker, the planned speaker who was with us from the start. Had some really great insights at the start of the spaces, and they kind of carried out, as always, throughout to the end. Must follow all the speakers up here, but I would love to throw the wrap-up section. Start it over with you, Brad. What are you really looking forward to next week? Anything you got, from a business, Twitter account, whatever standpoint going on, and yeah.
Well, thank you for the kind words, and the feelings definitely very mutual. Really enjoy your content and all the speakers on here. In terms of looking forward, news of the week post for my Substack will be out tomorrow morning. Everything I post is free, so it'll be posted to Twitter. And then next week, just looking forward to things like investor conferences starting back up. Hopefully, some news headlines crossing. It's been a really quiet 2 weeks with the holidays in terms of actual fundamental news stories breaking about the companies I own. So kind of just looking forward to getting more information about how they're doing, both I guess from press releases and these interviews coming up. So excited to have more content to share because it's really been a very light few weeks. But I'll just quickly comment on IPOs, because I do actually I do invest in IPOs, but there's a large caveat to that. I generally invest like 10 to 15% of a full position, or maybe 20% if it's not ridiculously priced, because I mean over the last 2 years we have had a lot of incredible companies with really also incredible incredible valuations in terms of being like high and rich and somewhat inflated. So this last, I'll give examples like Lemonade and Olo and then GoodRx are just three names that kind of, not to sound insensitive to people maybe who own them, but sort of grateful that they've kind of come back to earth, because now I don't get to own just 10% of a full position for the long term, but I can actually start to build it out and improve the cost basis and actually have a full position now that they're somewhat more, or actually a lot more reasonable for some of these. But yeah, I think it's a really good point of no matter if you want to invest in an IPO or at the IPO or not. I think it's never really a good idea to go all in on day one. And I think a lot of people would agree with me there. These are these are the most unproven companies in public markets. We have no earnings reports. We have no evidence on how they're going to perform as public companies, or with the large cash infusion that they're about to get, how they're going to deploy that, and how effective the deployment will be. So I mean, they're extremely inherently risky investments. So just going really slow with allocation and using future quarterly reports as evidence of their execution, I think makes a lot of sense. And I try not to give advice, but maybe that is one piece of advice I'm comfortable giving them, not just to go all in on an IPO, on a really volatile IPO on day one. Is just it makes things a lot more stressful, I think, and maybe less successful too. So thank you for having me.
I think it depends, right? If you can get an allocation for a very, very high IPO, take it, go invest, and just flip it in 24 hours.
Do whatever works best for you, man. But that's just how I feel. And thank you very much for having me. Always a good time, always a good conversation. Have a great weekend, everyone.
You know, I do also think the one thing on IPOs also, which is starting to change a little bit more. It was always a little bit that, you know, as a retail investor, I wasn't able to buy into the IPO price. I was buying into the secondary bounce, which for these companies that I would have wanted to be in were already up 100% in some cases. So, and that is definitely starting to change with a couple companies letting you get in at the IPO price. But yeah, so we'll be fascinating to watch how that does going forward, and maybe how that changes my opinions on IPOs in general. But I would love to throw the next wrap-up section to Gerg. I know we got Spaces together on Monday. I would love to hear a little bit of hype up on that as well, but also what you're looking for next week, and maybe any other personal things you have.
So let's talk about the space, right? The space, me, Wolf, and Gal are doing. Oh, me, Wolf, and everyone are doing is SARK. So SARK, right, is a short fund of ARKK. That's the Cathie Wood flagship fund. So when ARKK goes down 1%, SARK goes up 1%. And if you were to short outright ARKK, the borrow fees is way higher than management fees of SARK. So if you want to go short ARKK, the best way is to go long SARK. But we will have a lot of big multi-billion hedge fund managers, portfolio guys, analysts, people who love Cathie, people who hate Cathie, people who have been with Cathie for the last 5 years, or people just hopping on. So hop on. This will be Monday noon, New York time. So EST for most people.
Awesome. You getting a reminder link out soon, hopefully? Soonish?
Yeah. And I think it's something called the calendar. It might be on that too. So do you want to segue?
It will be certainly on the calendar. Gerg, I'm going to use your gift of a pivot. I'm going to throw it over to Stock Talk. And another thing that's going to be on the Google Spaces calendar, he has Spaces 8 p.m. on Sundays, and then we're going to bring it back and actually explain the Google Spaces calendar a little bit. I appreciate the setup there, Gerg. Thank you, man. Step back. I said it a little bit earlier. You got to be following all the speakers up here. Every single one of them has amazing stuff going on their timeline. Great information given out on the Spaces. Even better stuff coming to you from their timeline. Another person that's having Spaces that's going to be on our Spaces calendar is Stock Talk Weekly. Would love to kind of ask the same question to you on our wrap-ups. really anything personally you got going on through the Stock Talk Weekly brand and everything like that. And then anything you're watching for the stock market next week.
Yeah, man. Thanks. I appreciate that. Yeah, I mean, like I said, it was a great trading week for us. Anybody who's in my Discord knows that we were killing it this week. I mean, it's really encouraging to have, a group of really smart people in there, and also for us to be finding, like, golden opportunities even when the market is puking. I mean, that's always super encouraging to see, to see yourself outperform, not only, some of your colleagues and your peers, but also, just the broader market, which this week a lot of people seemed like they were really suffering. And so, nothing against those people. Obviously, I'm not rooting for people to lose, but it was nice that we had a lot of winning plays. And, we're going to continue doing that. For those of you who are interested in joining that room, I tried to price it pretty reasonably. We put a ton of content in there. We have a ton of educational content, videos, strategies. We have seminars coming starting next week. So we'll have live seminars with pro traders, myself, Pete Doom, TSDR is down there. I see Matt in the audience as well. He's in our Discord. Vegas is in our Discord. So we have a lot of great contributors that are posting ideas daily, and really kind of being accountable for their own ideas too, giving updates on the trades, what they're doing with their position. And so it's really educational, I feel like, for both trading and investing. And, I try to build it that way. We're getting better and better every day. We're kind of adding new content every day, organizing things. So, I'm really proud of the way that we've launched that over the course of the last week. We've been active now there for about 2 or 3 weeks. And so it's just been excellent. So for those who are interested in joining that, there's a link in my bio. Like I said, there's a lot of rooms out there that are $200, $300, $400 a month. I didn't want to price anything like that. In my eyes, the people that really need help can't afford those types of things. I did want to make it a paid room just because I wanted to be more of an exclusive community. I didn't want all 120,000 of my followers to be in there. And so we wanted it to be a little bit more limited. And so for those that are interested, again, links in my bio. But other than that, we also have Play of the Week coming back on Sunday, finally, which for those of you who tuned in for the first 6 or 7 episodes, I know a lot of you enjoyed it. We try to keep that very educational as well. For those who are not familiar, we do 15 picks from pro traders and then 15 picks from the audience for a total of 30 picks for the week. And then we kind of shout out the winners in both small caps and large caps going into the end of the week. And so that has been a lot of fun in the past. We're starting that again Sunday night. And it should be fun. I know Gab will be there, Wolf, and I know Evan will be there as well. Gerg will be there, I'm sure. TSDR, Matt's going to be there as well. So a lot of great traders in there sharing their ideas. It should be fun to get that started back up. And then, yeah, that's pretty much it for me. Appreciate you having me, Evan, as always. Appreciate all the speakers up here. Give them all a follow. Give Brad a follow. Vegas, TSDR, Gerg. I see Sarge down there in the audience. Matt down there in the audience. Give them all a follow as well. All great traders, and I'm sure you'll find something to learn from all of them.
Forgot to mute my background there. 100% agree. Thank you, Stock Talk Weekly, for coming on. Big shout out to Sarge and Matt below. They are also great follows. I actually asked Sarge for his opinion on the newsletter that I'm working on for tomorrow. So we will have a nice direct quote to Sarge for that. But yeah, I want to get us to the second to last person we have to wrap up. Similar thing for you, Vegas. Anything you personally got going on your account or personally with that, and then kind of also where you're at in the market and where you're looking for next week.
Yeah, I have, a couple of things, as I mentioned earlier, like Disney and, watching Apple to see what that's going to do. I think Johnson & Johnson looks really good, too, for a follow-through. Ford had an amazing couple weeks on Ford. Can't take your eyes off that one. I'd love to see that break $25 next week, and we'll see what happens there. We know DraftKings launching their sports betting in New York actually tomorrow, so could see some action on DraftKings. We had a nice swing on that one, but it'll be interesting to see if we can break $28 and see if there's any kind of hype on the stock next week following that they're launching in New York, which is going to be a huge sports betting state. So I think it's going to be one of the biggest ones in the U.S. So we'll see how the market responds once that's officially launched, which is happening tomorrow. And I'll see what else is coming up. I got to go through all the watch lists, got to go through the money flow prints and see what's cooking. But definitely Disney's looking good. Apple looks interesting on my watch. And also, like I said, I'm going to be digging into some docu. And I also saw some unusual dark pool on Twitter. So I'm going to be looking into that a little more and seeing, what's going on over there and looking for an entry point if something can happen here on Twitter, because I haven't traded that one in a little while. So definitely going to keep a watch on that one and see what ideas can be triggered, and look forward to sharing with the community, and appreciate everyone's support and follows. So to what Stock Talk Weekly said, great opportunities this week, some amazing trades, and I will say his team does phenomenal due diligence on these stocks, in like sick due diligence. So I love it, and look forward to sharing with everyone as well. So appreciate everyone's time tonight, and wish everyone an amazing weekend, and look forward to sharing some ideas for the week as well.
100%. Thank you again for coming on Vegas. Always our pleasure. I would love to throw it over, last but not least, to my co-host, Gav, on the Wolf Financial account. I would love to get a little bit of a Google Spaces calendar in there before the wrap-ups, if that's possible. Note for myself from the presenter, I know Gur loves to give us that layup. I will definitely position us better so we can get the layup into the Wolf Financial calendar shout out right after. But this is one of the best tools that we've created. So you're definitely going to want to be listening to this and how you can get on
Not
it.
one of the best, the best.
The best.
Yeah.
I agree, Gerd. I
Correct
agree.
yourself, Evan.
Yeah, it feels like I'm milking it in this space. I think this is the third or fourth. So I'll keep this one real quick. Yeah, I think it might be third or fourth. It feels like. All right, a lot going on today, but if you didn't hear it beforehand and you want to know when all of our spaces are, I already have several DMs. Hop in my DMs or Stock Market News DMs. DM us, send us your Gmail, ask to be added to our free Google Spaces calendar. That's it. End of story. We'll get you on there. Next week, just so everybody knows, we already have 3 spaces planned on Monday between, ours and Gerg's. We have the one on Sunday with Stock Talk, 2 ready planned on Tuesday, 2 I think planned already on Wednesday, and then 2 ready on Friday. So you probably, if you're in the audience though, you don't know when any of those are happening yet. If you want to know when all of them are and just want them on your calendar, just DM us. We'll throw you right on there. Easy peasy, lemon squeezy. Anything else you want me to add to that? Oh, I can throw Gerg. What are the rumors? How do I set that up, Evan?
Yeah, so there was a rumor going around on Twitter that people who actually work on Spaces and people with multi-million follower accounts were on that page. Could you confirm or deny that?
I can confirm the rumors are factual. I have been DM'd by multiple people who work at Twitter Spaces who have asked me to be added to the calendar. They are trying to steal our IP of a Google Calendar. But yeah, it's completely true. And also people with over 1 million followers, verified people. We have CEOs on there. It is awesome. So if you're not already on there, join up. You're missing out. As for personal wrap up, excited to kind of close out the week, but not really, because I have 2 calls right after this. And then I'm excited to meet Stock Talk Weekly in person this weekend. I think we're going to go out to a bar, have a good time. And that's what I'm looking forward to.
Awesome, man. I appreciate you. I really do think that was the second time we got into this Spaces calendar on this.
The recording will tell all.
The recording will tell all, and I'm excited for it. Over, under, and shout out to me for being one of those calls you have after. So getting into my own wrap up here. Thank you to everyone for coming in and joining. Thank you to all the speakers for coming in for free. Nothing in there, no pre-planned or anything. Just coming in and spitting out the knowledge that you guys have. To all the listeners, thank you all for coming in and hopefully getting some value from this. Make sure you're following all the speakers up here. I want to give a big shout out to the Green Raccoon that's up here as a co-host, Bullish Rippers. I tweet a lot from that account. I'm really trying to grow it. It is the account for my newsletter, which will be dropping tomorrow, but I'm trying to do a lot more with it. It's actually low-key the first time I'm saying anything about this, but we may be working on a nice website with some really cool charts that I haven't really seen anywhere else. So I'm excited for that. We're making a lot of moves on that Bullish Rippers account, so some cool things coming there. Make sure you do check them out. Like I said, check out all the speakers up here. Have a great weekend. Check out the Google Calendar. The next time we're going to see you is that Sunday afternoon space, probably from Stock Talk Weekly. There's a small chance I do a quick 30-minute spaces tomorrow, but we shall see. Everyone have a fantastic weekend, and see you all back out here Monday morning.